Really excited for this event. We're going to go ahead and get our panelists up here in just a minute, and we're going to talk, and we're going to have some time for Q&A at the end. This will be recorded, so if you miss something, if you have to step away, it will be recorded, will be sent out to you, and it's wonderful to connect with each of you. It looks like we've got Seattle, we've got Thousand Oaks, California, Columbia, Maryland. Awesome, awesome. Keep putting in the chat where you're coming in from. All right, I'm going to go ahead and welcome our panelists up and give them a intro. So let me go ahead and welcome them up here. So let's have them come up here. All right. Okay. Looks like, Mark, you're already up here. Looks like we just need you to start your video, Mark. I'll move to webinar. Okay, I'm going to go here. Move to webinar. Okay, perfect. Okay, we'll get started here as soon as we get our panelists up here. Okay, awesome. So just a quick reminder, this is the 2024 Tax Strategy Summit. Amazing guests here today. I'm going to go ahead and quickly introduce them. We've got Mark Kohler, who is a CPA and an attorney who runs KKOS Lawyers as well as Kohler CPA, does a lot of tax strategy, has a lot of resources, trains a lot of CPAs and tax strategists across the country, and Main Street Tax Pro. Welcome, Mark. Excited to have you today.
Thank you for having me.
Of course. Great to have you here. Next, we have Courtney Moeller, is a good friend of mine. We've known each other for years. She's with Diversified Investment Partners and basically does a lot in the oil and gas space and also other diversified investments. She's also a tax strategist as well. Welcome, Courtney.
Thanks for having me.
Awesome. Like we said, it's twice in 1 week you get to see you, which is always great to see you. Whenever I can hang out. So, and then we've got James Rainwater from Rainwater CPA. He's also a tax strategist, works with many entrepreneurs, and we're very excited to have you here today, James.
Hey, Bronson. Thanks. Excited to be here.
Awesome. Awesome. Good to have you guys. Well, guys, I know we have a lot of people that are very interested. I also want to get that chat going. If you have specific questions or topics you'd like to hear about, go ahead and put them in the chat. We will pull from those. We will do some specific Q&A at the end, but if you have things you want to hear, let's go ahead and put those in the chat. I wanted, before we get into specific tax strategies for year end, because I know there's a lot to say about that. I know Mark and James and Courtney, we all have a lot to say about that. Let's talk specifically. One of the hot topics has come up lately. If you're a real estate investor, which I know a lot of our folks are real estate investors, we've seen the depreciation, the Trump era tax depreciation or bonus and accelerated depreciation go from 100%, down to 80, now down to 60, and next year we'll go to 40. What do you guys think will happen when Trump takes office? Do you think those will continue and go back to 100%? Do you think it'll be some other structure? Obviously, we don't know, but do you have any insight into that? Let's start with Mark, and then we can kind of work our way around.
Well, this is what Trump campaigned on. President-elect Trump. President-elect Trump campaigned on renewing all of these and extending all of the Tax Cuts and Jobs Act policies. That's what we in America are starving for. We hoping for. He's the quarterback on the field. Some of you may have not voted for him. Of course, the majority of the country did. And he said, I'm going to extend these Tax Cuts and Jobs Act provisions, and the big one is bonus depreciation. So I think we're going to see a big tax bill this coming year, just like the first year he was in office last go around. I mean, we're in Act 2, and we're going to see that and the 199A and a lot of the other strategies be extended, and I'm excited, and I think we should see 100% bonus depreciation back.
Awesome. Awesome. Courtney, James, you guys have thoughts on what that will look like?
I agree with everything that Mark just said. I think, he wrote on and implemented so many of these tax benefits, and they've been trying to get rid of them. And I know there's some estate tax stuff that's about to change here pretty quickly. I think that's not going to happen. Obviously, the less taxes we pay, the more it injects money into our economy, and we need that.
Yeah. James, what do you think for this next year? Any changes that you're keeping an eye on?
I think it's going to be a high priority for President-elect Trump to come in and get the tax package together, get it through. The Tax Cut and Jobs Act was his act, that he put through. And I think that that's going to be a high priority for him to extend a lot of those provisions. I think bonus depreciation, like Mark said, is going back up. I think research and development credit is broken right now. And that I think is going to be a high priority for him to fix that as well. So I know a lot of people would like to see that, and it's not working well right now. President-elect Trump is a real estate guy, so I think we're going to see a lot of real estate incentives in that first tax package.
Yeah, I think for a lot of people, one of the things that we've been watching is that the tax benefits for real estate has really changed, especially for syndicated or other kind of bigger deals, not having those in place. So that can really be helpful. Courtney, I know you do quite a bit of work in the oil and gas space, and for a lot of investors, we've partnered on a deal recently, and just a lot of people are kind of a little bit scared of oil and gas, and knowing that hey, there are some tax benefits there. But can you talk a little bit about the tax benefits that you see in those specific deals or any other things related? I'm actually going to ask Mark and James as well. Just what are some other kind of strategies at the end here if you have some taxable basis to consider?
Sure. No, then and the tax benefits of investing in a working interest are probably some of the very best tax benefits you can get just from making the investment. You don't have to put in 750 hours into being a real estate professional or anything like that. You get it just by making the investment. And most of what we focus on is going to bring anywhere from 80 to 90% in that year that you invest. You've got to write the check by December 31st, and we actually have the first 3 months of the following year to even start drilling the wells. So there's a little bit of flexibility in that. But that immediate depreciation that's good against any type of income is what everybody's looking for. Active income, W-2, 1099, capital gains. There is no limit to how much you can offset in capital gains, but you can only offset 250,000 for W-2 income. So I feel like that's just another way that W-2 workers are kind of punished through the tax code. So, but it's a great investment. We love it. I have people that come to me just for that depreciation.
Mark, what do you say if someone's got a big bill? Let's say I have a business, I'm making $1 million a year, or maybe I'm a W-2 high earner, like in California, and I'm paying 50% plus in taxes. What are some things kind of people should consider in that position as they start looking into tax strategy?
Wow, there's so many options, and I think your approach is going to be different at year end in these last 2 weeks than it would be in Q1 building your 2025 plan. But if I may, I want to piggyback Courtney. I love oil and gas. I've invested in oil and gas in working interests. But the timing of that is also important. In the last 2 weeks of the year may not be the moment to pull the trigger on that. You want to be a part of that working interest for the entire year of 2025 to get the biggest impact. And I was actually asking Courtney this before we started here on the show, because I think oil and gas is an amazing strategy. There's no AGI limits. You're not going to get phased out of those strategies. And I think oil and gas is something a lot of people don't think about to create cash flow and tax incentives. And so I just want to ask that back of Courtney too. I mean, right? Isn't that right? Like, we're going to get a bigger bang for our buck on the working interest if we're starting out with the full year versus maybe in Q4.
No, no, as long as you make that investment in, I have people right now, I literally just bought a very tiny interest on Friday that'll offer 85% depreciation, and they will get 100% of that for 2024.
Okay, that's good to know. See, this is why I come on your show, Bronson. I just learned something new
Yeah.
myself, and I love that. And I think that's really important because the year-end strategies are really what I'm grateful for those that are listening here, because that's what we need to be thinking about. What can move the needle in the next 2 weeks? And then we reevaluate in Q1, what do I need to do for 2025? And anything I can do to offset that income. So back to your question, Bronson, if I'm making $1 million a year, what's going to save me taxes in the next 2 weeks? Versus what's going to help save me taxes in 2025. They're two different questions. And I think there's a lot to do before year end. And if you do own real estate, we want to be looking at the Dash-4 self-rental. If I do own real estate, and if I already own real estate, can I make a short-term rental loophole? Can I make that work? I may not be a real estate professional, a reps, but there's a lot to be done in real estate without having to meet the reps or real estate professional. For those that don't know, there's some hour requirements and all that, but there's other loopholes there. So much to talk about. Sorry, Bronson. I know I just
No, there's a lot to
brain
talk. We'll
vomited on
definitely
you.
come back to more. I know there's tons of strategies. And I think, really it's hopefully the goal is not like, okay, we're halfway through December and all of a sudden I realize I've got $1 million gain and I'm trying to figure out in the last 2 weeks. This is where strategy and planning it out comes. So we're actually acquiring a business next year, and it's going to be not maybe not a million, but it's going to be a lot of more profit in our business. Then, so I'm going to have to calculate, okay, with that profit, what kind of plan are we going to make? And that's where people working with people like you, Mark and James, there's that tax strategy plan. So James, why don't you talk to us a little bit about, I guess you can either wrap up strategy for this year, or if someone knows they're going to have a big gain, what are some of the strategies that people should start looking into now, even for next year? What are the things that, because there's kind of two different things. There's this year and there's also next year. Maybe we can touch on both.
Yeah, sure. Yeah, and kind of the dovetail off of that, and I've heard Mark, you talk about this a lot too, where the industry is kind of broken, where the normal, taxpayer goes to see their CPA in January or February or March to try to save money on taxes for 2024. It's a little too late. So now, like you've got the next 2 weeks, there's some things that have to be done in the next 2 weeks. If you have a high income for this year or a big gain for this year, there's certain things you want to look at before December 31st, like oil and gas. And I love oil and gas as well. I'm an investor myself. So there's things that you want to get done before, the end of the year. And then there's some things you can do after the year, but the number of things on that list goes down pretty significantly. If you don't have a lot of time this year, if you have a big gain, that you want to offset, tax loss harvesting is a great strategy, but that's something you would want to have started, much earlier this year. It also depends on where the gain's coming from, whether it's real estate, is it crypto, is it stock market? Those are different types of income and gains that you want to, kind of plan for and offset when you're thinking about that.
Right. I'd love to put this out there to the group because I know that, and we didn't really get into this. So if you're not familiar with oil and gas and investing, and I'm not a CPA, a couple people here are, but so no specific tax advice. But the real advantage is if you're a high earner or you have a business, you can use it against active income versus otherwise it's more like just against your other passive investments. That's what depreciation for real estate and other things are, which of course is far less than it was. We were getting often 80 to 100% of the amount invested for year one on a real estate deal, a syndicated real estate deal, and now that's 30 to 50% because some of the phase outs that have happened. And so oil and gas just is awesome. I know there's other things like there's solar, there's other sorts of green energies, there's some incentives there. There's also some around farmland and agriculture. But can you guys maybe talk about some other things that you've seen? I think CPAs and tax strategists will see things that are just a little bit outside the box for most people, but just some specific investments that you see or structures are like, here's something that if you haven't heard of it, could be something to be helpful besides oil and gas, but it also provides some similar characteristics for someone.
Yeah, Bronson, can I interject? And I know Courtney and James are fully on board on this. I think when you go to tax plan, it's not one thing. You're not going to just say, oh, I'm going to do oil and gas. I'm going to do solar. I'm going to do a real estate professional strategy. You want to take a kind of a holistic approach and do all the little things. Tax savings is doing a bunch of little things. And I know that may seem futile at times, but they add up. Now, one of the ones I love that has a ripple effect throughout your family and throughout generations and a legacy is all of you listening have a family office. All of you don't have to be a billionaire to have a family office. And so there's 50 million Americans with a side hustle. They're getting a 1099 for something, whether they're doing a little side consulting, some online sales, a little this, that, or another, from an Uber to Turo to outdoorsy to whatever. If you've got a little bit of extra income that's coming through on a Schedule C, and for any of you that own a rental property, that's a Schedule E. I want to emphasize you have a family business. It is the gateway drug to the American dream. And when you have a little bit of extra income outside of working for someone else, that's the path to wealth and building your future. Now, with that, you have a family office. So what do I want you to do in the next freaking 2 weeks? Have your family board meeting. Have a meeting where your company, your LLC that owns rentals, or your little sole proprietorship, whatever the hell it is, maybe you have an S Corp, you're going to pay for your kids to come in, mom, dad, whatever. My Thanksgiving was a tax write-off. I used the debit card at Costco to buy crap for Thanksgiving because we had a family board meeting at the end of the day after Thanksgiving. Talk about wealth. Talk about money. Talk about getting out of debt. Talk about funding your Roth IRA. I mean, there's so many, again, we're going to hit a litany. I'm going to rattle off 10 year-end tax tips before we leave today. And I know James and Courtney have them too. But I just think everybody needs to have that family board meeting because it's a chance to unify your family. Talk about legacy. Talk about money and finances, which so many families don't do. And it's not going to happen in school. It's not going to happen in college. It happens around the kitchen table, and it's a tax write-off. People, do it.
Love it. Yeah, that's awesome. So make sure, yeah, that's a great, I haven't even thought of that, but yeah, anything you can do to create a write-off for yourself is awesome. What else? Courtney, James, any other, I think the question was really around, what are some other things that you've seen or even other investments that are out there that, or even strategies, like that's a great strategy of reducing taxable income.
I think, kind of along with what Mark is saying is hire, if you have that small business, if you have that 1099, if you have the rental property, being able to hire your kids in that business.
Yeah.
And there's a specific way you have to do it to stay out of trouble and avoid labor rules and all that stuff. But you can hire your kids in your business, whether it's a small 1099 business or whether it's a multi-million-dollar huge business. If you're paying your kids under 18 directly and it's legitimate work and we're documenting that, but paying them directly is a great way to get some of that income out of your 40-50% tax bracket down to maybe a zero tax bracket, or maybe even make some contributions to a Roth to allow that to grow, over the kid's lifetime. Or
Can
just,
I share?
yeah, go ahead, Mark.
James, I want to share this. You're going to laugh at this. This just freaking happened yesterday, Bronson. You're going to love this. My daughter, she was ill. They've got this flu thing that's going around, whatever. And her and her husband, I was like, hey, I'll send you a mobile IV. So I sent him a mobile IV. This was yesterday. I sent him a mobile IV. They're just feeling like crap. So I hook them up, whatever. And I said, just pay for it. I'll reimburse you. My daughter's like, okay, thanks. Blah, blah. Texts me after and she goes, hey, Dad, can you just reimburse me normal? Will you please not 1099 me for reimbursing me? Because my kids know if you ask for money, you're getting a freaking 1099. And when they come down for Christmas on Christmas Eve and they go to their stocking, they're getting a 1099. Any money I give them during the year, they're getting a freaking 1099. People, if you own a freaking small business, and James, I'm so glad you brought this up. This is the biggest year-end tax. I don't know if it's the biggest. This is one of the top 5 for me. If you're going to say I paid my kids freaking last year, you got to pay them. You can't say I laundered money. You got to actually launder it. So if you're going to say I paid my kids, you got to freaking pay them. And so my daughter was like, please, will you not 1099 me? I go, all right, I'll reimburse you out of my personal account. She goes, thanks, Dad. Because she knew it was going to end up on a 1099. And it was awesome. I mean,
That's amazing.
All of you parents that have a small business, you got to pay your kids properly. Now she's over age 18, different strategy for under age 18.
So 1099, so not a lump of coal in your stocking. It's a 1099 and everybody's afraid of it. So that's funny. Courtney, why don't you jump in here?
Well, obviously I'm not a CPA. Oil and gas is my specialty. We do some charitable, donations and things like that offer, 4 and 5x your donation. I like to kind of pair that with some of what I'm doing. So I like that. And I do pay my kids. And I will tell y'all, like, I have to record the daily price of Bitcoin and things like that. And I do all of those things. So every time my kid's like, I need a new glove. And I'm like, well, you better get in there and log some business cards into my CRM. So you go work.
It is really amazing when you have a business. It does open up everything to you, your car, or your home office, everything. You got trips you go on, all the expenses.
And I know this is not the question you asked, but like Christmas is coming up. And so like my kids they get silver every year. They're getting some Bitcoin, they're getting some XRP, and actually another, like some kind of Roth or something else was something I was kicking around and adding into that. But all of my kids, and then whenever I owe them money or something, I'll always incentivize them. If you'll let me pay you in Bitcoin, I'll pay you double, or, whatever, just so that it encourages them to save and build some of those resources up.
Yeah.
Can I comment on that, Bronson, real quick?
Of course, yeah.
Okay, Courtney, I love what you're doing, but I want to be very specific, everybody. To get the tax write-off for paying your kid in your business, which, James, I know you teach every day at Corvée, you have to go from your business to the kid's account. Now, if you have an S corporation, there's a different method for kids under age 18. Read it in my book, plenty of articles out there. The bottom, like James just said, there's some procedures to follow. But here's the point. Courtney's not actually going to give her kids Bitcoin. She's going to pay them, and with their account, they're going to transfer it into their crypto Roth IRA. We set them up at directed IRA every day. So we don't want her kids receiving Bitcoin from her. She's going to pay them, get a tax write-off. And I know Courtney already does this. I just want to break it down. The kids are going to get paid from the business. Then they put the money into their IRA to buy the Bitcoin. So they end up with the Bitcoin or the XRP. By the way, XRP has killed it for me, Courtney, this last month. But the kids don't get it directly from me. I pay them out of my business. They fund their Roth, then they buy it. Now that gives you, the business owner, the tax write-off. They don't pay taxes on the first 14 grand and change with their standard deduction. Then they turn around, drop it in their Roth. They can put 7 grand in, and then they can go buy their crypto tax-free. And any contribution can come out for college tax-free. So we're building a college savings plan and a wealth building plan, and we're teaching our kids about investing. We're getting a tax write-off. And we're doing all this at the freaking board meeting. You're knocking out 9 birds with 1 stone. And when parents are like, holy shit, Mark, what did you say? I said, get involved. Don't hire an accountant to do this for you. You are the captain of your freaking ship, and you've got to get engaged and understand this. You don't have to know where bucket what line it goes in or whatever on your tax return. Know what the hell is going on and get engaged with your tax advisor. Sorry, Bronson, I got to throw that out.
Love it. No, that's great. That's great.
And let me just clarify. So if they buy, money goes in, they put crypto in their crypto Roth IRA and it has gains, they do not pay taxes on that.
Yeah.
Wow.
Woo!
Amazing.
I love it.
You start them when they're young. That's awesome. And then it's there. James, anything else you want to add before we move on?
I want to take a second to point out, because it's kind of subtle here, but what Mark just did is just layered like 9 different strategies that all come together and create a great progress on a plan. And that is, you were saying this earlier, like that is the key to tax planning. It's not always one match. Everybody, we talk to a lot of people come in, and talk to our advisors, and they're like, what's the magic? Like, what's the magic strategy? And it's not. It's a lot of planning, figuring out like what different pieces are going to fit really well together to save you money on taxes.
So I have a question for each of you, especially Mark and James. But when is it time to hire a tax strategist? Is there a specific net worth? Is it an event? Is there something an event that happens? It's like, okay, well now I know it's time. You're paying this much in taxes. Like when is it time to do that, Mark?
Yesterday. Yeah, freaking yesterday. You know who my number one financial consultant is? A 21-year-old. A 21-year-old at ASU. He's my stepson. He's freaking amazing. And he and his brother give me advice on what I should be buying in crypto or in stock, because these kids are so freaking smart. Now, why I bring that up is we should be teaching our kids at age 16, 12, whatever, just like Courtney's doing with her kids, to have a Roth IRA, to have a small business. I told my kids, I don't care if you graduate with straight A's. If you want to become a doctor or an astronaut, knock yourself out. But I want you to graduate without student debt and a small business. After that, I do not care. And you're going to fund your Roth IRA all along the way. And so the point that I'm trying to get at is, as you start engaging with your children and you're teaching them this, they need a tax advisor just like you right away. Now, I've got a network of tax advisors. Corvée trains tax advisors. They're out there, but they can be elusive. So I'll be very specific. And James, I think you'll agree with me. I'd love your comment. There's really 2 types of accountants out there. Those that look in the rearview mirror and those that look out the windshield.
That's good.
If you're going to your accountant once a year to have them prep your tax return, that's rearview mirror. They're not giving you strategies. You drop your shit off, they do your tax return, and then you pick it up 2 days later or a month later and you pay your bill. That's not tax planning, people.
Right.
The ones that are looking out the front window say, okay, let's meet quarterly. Let's have a strategy. I don't care if you're 21-year-olds, 31, or 71. You're going to be meeting with your advisor once a quarter. You're going to say, what the hell is your plan? Are you buying real estate? Are you buying oil and gas? Are you buying solar? You have a small business. You have a 1099. What the hell are you doing? And let's make a plan. And you're engaged in it. And by the way, don't blame your accountant. If you're not demanding this from your accountant, you're to blame too. So have that conversation with your accountant and say, I want advisory. And if they look like a deer in headlights, bye. And you go to markjkohler.com, you go to look for the tax book, you go to Corvée, find someone, I don't care. Find a tax advisor that wants to have a quarterly meeting and talk about strategy. And you know what rich people talk about? They love to talk about tax strategies. You want to be rich?
Yeah.
Talk about tax strategies. You go hang out at a dinner party and start talking tax strategies, rich people hang around you. That's what they do. This is what we geek out on.
Yeah, exactly. No, we started a mastermind recently called the Wealth Forum. Courtney was actually just at our meeting in Austin, and it's basically a lot of tax strategy, investment opportunities, and it's huge. I mean, we had a friend, Justin Donald, was there, and he brought up this thing: if you were just to reduce your taxable basis, you would make so much money because it's your biggest expense and it compounds. So it's huge what you can save on that. James, jump in here.
Yeah, I mean, it really, like, tax planning, tax strategy changes people's lives. Like, if you can cut that tax bill in half and reinvest it in your business, or invest it in a Roth, or something else, oil and gas, to be able to multiply your wealth, like, it makes a big impact on people. And I agree with Mark. Thankfully, Mark, you have Main Street Tax Pro, where V is doing some great things. There's some other people where the industry is finally starting to change, and there's more people looking out the windshield instead of just the rear view. But I absolutely agree. Like, if you're not getting that, then find somebody who can do that for you, because there's more and more people coming online now that understand looking forward, and starting in January to plan, for the tax year, not the previous year.
So a question for this is, I'm a deal flow guy. I love seeing new deals, new opportunities. We'll start with Courtney on this one, but I want each of you guys to answer is how do you encourage people, or how do you find new deals or new deal flow? Or what are some ways that you would look in and say, hey, here's some opportunities, like you said, in solar, or maybe oil and gas. Now, Courtney, I know you are an oil and gas person. You've been doing it for years. That's your genre. But if you were not, how would you source deals as a passive investor? How would you find things that are tax advantaged? And also, we'll get into James and Mark on how, as a CPA or as a tax planner, how do you advise people to, do you refer people to certain groups you've worked with? I'd love to just kind of hear something about deal flow. So when we start with Courtney on that one.
Yeah, obviously I put my own oil and gas deals together, but I'm always looking for tax credits and other opportunities that are out there. And for whatever reason, I guess just because I've put it out there, so they just kind of flow to me. And then, I spend a ton of time, digging into things and really figuring out how it's going to work. Is this going to cause audits? Is it an issue? Is this a legit thing? So, I've had people bring to me, buying tax credits from Cherokee Nation and, charitable, mineral donations and medical donations and things like that. So, but oil and gas is really primarily where I live. If I can find other things, I share those with my investors. It's stuff that I'll put out and say, here, this opportunity is out there if you need it. I like to have those calls, and even my investors will even call me and say, look, I found this opportunity. What do you think about it? So it is constantly being brought to me all the time.
Yeah, amazing. Mark, how do you, if clients need, access to tax advantage deals, do you guys refer them? Do you just kind of say, hey, keep your eyes open, or how do you kind of advise folks on that?
Uh, well, we hold every 6 months, we hold an alt asset summit where we
Nice.
have 10 to 15 vendors of all sorts of different types of investments out there, parade them in front of our clients. Um, if you listeners out there have a tax advisor should be acting like a quarterback.
Hmm.
They're not going to sell you strategies. They're going to give you ideas and options that you can go vet, research, do your own research. I type ideas. And so as you turn the corner into 2025 and you start looking for strategies and investments next year, if you don't have an advisor that's willing to play that role, I think you need to shop around. And I don't care if it's your sister-in-law that does your taxes for a spaghetti dinner once a year. It's time to up your game. And I think that's really the key here is having a team and an advisor that's willing to introduce you to groups and has a platform, whether it's podcasting or a channel or a workshop that gives you a chance to meet these people. So.
Yeah, that's great. That's a good word for sure. James, how do you respond to that when someone asks you, hey, how do I get into some great tax advantage deals?
So, I mean, when somebody asks us that, it's fairly easy, because we spend a lot of time researching, vetting strategies, deals, that kind of stuff, to be able to make introductions for our clients. There's a lot of crazy stuff out there that just, you have to do your own due diligence. And, if you have an advisor, like Mark said, kind of being the quarterback and vetting that stuff for you, that's the way to go. As you, Bronson and Courtney, you all know, the financial advisor industry is a little broken too, and that there's a lot of advisors that don't understand alts, don't understand oil and gas, don't understand real estate deals. So working with somebody that that we can refer to as tax advisors that really understands that market, and can help our clients is the way that we like to go.
Yeah, and actually too, it's interesting. A lot of I was a registered investment advisor for a few years, and now I'm an RIA, but it's a recovering investment advisor, so I'm not registered anymore, but I'm still recovering from it. But a lot of times, you're actually disincentivized to have people go into alternatives because people started putting 5 or 10 or 20%, and they put them into alternative stuff. You didn't get paid on that, right? So you were basically kind of giving business away. And so it's interesting in the financial world. It's not like it's us or them, but the alternative side is it just operates very independently from Wall Street and a lot of the other large, Wall Street firms. We're going to open up to questions in a few minutes here. So if you do have any questions, go ahead and yes, please, Mark. Yeah.
Can I just throw this out, Bronson?
Yeah.
And we talked about this before, and so please forgive me, but I actually feel I have a passion, and I feel like I'm called to help the Main Street small business owner with this number one cost in their life, taxes, and unlocking those. Can I just rattle off at least some year-end
please
tips
rattle
here?
them off. Let's do it.
I've been dying to do this.
Get your pen ready, people. Here we go.
Okay, I want to rattle off. I could go to 20, but I'll do maybe 10 or something. And James, you might want to echo some of these. You've already given one of them, which is paying kids. But I want to just get these on the table, Bronson, and then I'm just here to help answer questions and get people, because we got freaking 2 weeks, people, till the buzzer goes off. April 15th is recording the score. We got to do some shares there. Number one, anybody that has an LLC is that okay, Bronson?
Yeah, 100%. Yeah, that's what we're here for.
All right. Any of you that have an LLC that's made more than 50 grand, a small business of any sort, online consulting, anything, that side hustle you could drive Uber, whatever, and you're going to net 50 grand, 4 or 5 grand a month net after expenses. A retroactive S election to 1/1/24 could save you money. So look into that. I'm just going to give these tips. You got to go check this out. Get an advisor. You got 2 freaking weeks. Do not delay. Number 2, if you already have an S corporation, because the reason why you're doing this is to save on self-employment tax. Thousands of dollars are at stake. Make the S election, get your payroll in place before the end of the year. You got to kick out a W-2 in January. Now that W-2 also, which brings in 2 or 3 other strategies, should be showing your HSA contribution if you have a health savings account and your health insurance deduction. If that's on your W-2, you further receive a savings on FICA and you nail reasonable comp. We talk about this all the time, James. You know it. We got to hit the S Corp and reasonable comp, but you can reduce box 3 and 5 on your W-2 with HSA and health insurance. Make sure your accountant and your payroll provider knows what the hell they're doing. Next, paying the kids. 18 years or older, different strategy. Under 18, whole different strategy. Learn it, know it, make it happen before year end, which unlocks funding a Roth IRA for your kids. It's just like, holy crap, what Courtney was saying. If you don't pay your kids before year end, you can't even fund a Roth IRA. You have to show that you paid them. Another strategy, paying your spouse. Do not pay your spouse just to get Social Security benefits. Your spouse, husband or wife, is going to get Social Security under the spousal benefit, whether they work or not. So don't give them a paycheck out of your S Corp just to get Social Security. It's a waste of time and a waste of money. But we'd pay a spouse to fund the solo 401k. Another strategy. If you want to pull off the solo 401k, you got to do it in the next week because the IRS shuts down their system for maintenance for the last week of the year. If you don't have an EIN for that solo 401k, it ain't happening. So you got to pull the trigger on a solo 401k, your salary, your spouse's salary. Family board meeting, already talked about it. Travel, dining, all of the hotel and airfare and Airbnbs should be paid for by your business for your board meeting. Next, you may even rent your home to the business under the Augusta rule for your end to have your board meeting. Whole other strategy, got to be legit. Hope you have a good business. Do not do the BOI report. Another topic I know you wanted to bring up, Bronson. Next, buying a vehicle before your end. Be careful going out and buying a car you don't need. But if you need a truck or an SUV, you're going to buy a car in Q1, buy it before your end. Best tax strategy in 20 years is buying a vehicle. Trump unlocked it, and with the Tax Cuts and Jobs Act, the depreciation is amazing. Buying equipment before you're in. Courtney brought up charitable giving. You don't need a receipt for anything under $500. Anything over $500, get a receipt. Holy crap. If you're going to itemize charitable deductions, and I love donor advised funds, you can throw the money in now, decide where you want it to go next year. 401k matching. Anybody with a W-2, get your match done before you're in. Bronson, is this okay? I'm just rattling them off.
I love it. No, I love it.
Okay.
We'll add to it. Yeah.
I love the match and out strategy. Anybody that has a 401k, your spouse, 401k match, get the match and get the hell out. Then go fund your solo 401k funded by your side hustle. You can have two 401ks, the one at the day job, the one funded by the side hustle. You can do both, but you got to get the match at work. It's 100% ROI. The kids' Roth IRA. Courtney brought that up. Roth chunking. Any of you that want to convert a Roth, a traditional to Roth, you have to do it by December 31st, buzzer beater. You miss it if you don't get it. That opens the door to the mega backdoor Roth if you have to chunk anything. RMDs, any of you with parents over age 73, if they miss the RMD, 25% penalty on their RMD amount. It is nuts. That's due by December 31st. Talk to your grandma, your mom and dad. FSAs, get the reimbursement at work. Use it or lose it. HSA. Right now, we're in healthcare enrollment. It ends January 15th. People, we are less than 30 days for choosing your healthcare enrollment for next year. You've got to get it done before January 15th, or you can't even do an HSA next year. HRA, Whole Earth Strategy 105 plan. Woo! There's 10 or 20. I don't know. Bronson, I had to get them out there.
I took some notes, man. That was gold. Thank you for sharing, man. That's awesome. Thank you. No, that was great. There's a lot of things you can do. And obviously, if this seems overwhelming, you're listening to this in the audience, you're like, oh my gosh, I got to do everything in the next 2 weeks. Just maybe pick one thing, pick two things,
yes,
something you can do, or get on the phone with one of these guys or their team and just say, hey, here's where I'm at. And they're busy working, but they're here to help as well. Okay, James, do you want to add anything to that list? There was a lot of things there. I'm sure there's a few more that you have, or some other things anything you want to comment on from that.
That was a great list. Thanks, Mark. It was very, very comprehensive. A lot to get done in the next couple of weeks. I wanted to comment on the donor advised fund, because a lot of people are going to make charitable contributions in the next 2 weeks. And the markets have done well, crypto's done well. Like, maybe instead of putting cash in that donor advised fund, we put some appreciated stock or crypto into that we might be wanting to take off the table anyhow. And that's a great way to really take advantage of that strategy. Other than that, it's a fantastic list.
I have
a good one.
I have a question for you guys. And again, this is something when I do events like this, I mean, you guys are billed at hundreds of dollars per hour. So when you guys ask questions today, obviously no specific advice, but you get to ask people that their time is super valuable. But I have a friend who is in real estate. I won't share who it is in real estate, owns a property management company. Him and his wife, they give 50% of their income, and it goes in, I'm not sure if it's a charitable trust or some sort of trust or charitable organization that they've created. And then it's not run by them. They have somebody else who actually is the chairperson of this, but they're able to use it in their business to be able to go buy assets, and then it pays the trust a percentage. There's some way they're able to use it to go actually acquire more assets in the business. Does that make sense what I'm saying?
Yeah. James, you want to comment, or I can run with it for a moment?
You can go ahead. It sounds like
Okay.
a foundation, but I'm not sure about the equipment purchases.
And it's kind of funny. Isn't it funny how many of us go to a dinner party and someone's got some crazy dumbass strategy and you're like, how the hell are you doing that? But
I was like, wow.
I think it's probably a CRUT, a charitable remainder unit trust, which we set up at our company, and we do it for crypto, real estate, and appreciated stock. The concept is, if I've got an asset highly appreciated, I can transfer it to a charity, of which I could be kind of an investment trustee, but it goes into this trust. I sell it, and all that money can be reinvested. I could, like you just said, I could buy stock, crypto, other real estate. It creates cash flow. The trust pays me a regular payment. It's called a quarterly distribution, but the trust continues to grow tax-free. It's called a charitable remainder annuity trust, or a unit trust. I like the unit trust best. Anyway, so it's taking these assets that you had before, is continuing to invest them. It gives you a quarterly payment for the rest of your life, asset protected, pretty kick-ass, but you can't move into them. You can't take a salary. You can't play with it too much. So there are restrictions, but I like that strategy. It's nice. It's a CRUT. anybody with highly appreciated assets, that's where you're going to go. You're seeing them on the back end, Bronson, where
Right.
they already did the strategy. Now they're investing it and creating that
Selling
cash
it,
flow, and
right.
they brag about it. And so you just have to unpack it and peel away the onion. It could work for you, it could work for someone, but be careful. You know, there's pros and cons.
The thing that was interesting to me, and again, I don't know if it's this exact strategy, the CRED strategy you mentioned, but like they in their business, when they would go acquire an asset, they could have the trust use it like for the down, they would provide the down payment for that new purchase that they were making personally. But it had to be again a kind of an arm's length thing where this other, and they paid a percentage, like kind of like a loaning fee to that. Again, I'm not, again, this stuff it's very nuanced, and I know there's no specific thing, and some might say, hey, that's appropriate or it's not. But I just, again, maybe it's a dinner party thing that a friend of mine, I don't even know fully about it, so just thought I'd ask about it.
Yeah.
Yeah. Courtney, let's get you back in here as well. I wanted to touch base as well as far as I know we kind of covered oil and gas. We covered some of the things you're doing with your kids, some of the things that you're doing there. I do want to actually open up for questions as well. So I don't think we've seen any questions come in. So I want to make sure we get some questions on here. Are you guys enjoying this? I feel like we're getting some awesome, like amazing thing. Mark's list was awesome. James had some good things as well. Courtney, is there anything else that you tell folks to do as from the strategy you provide for people and kind of as you help them to kind of provide a plan for, what they're trying to do?
I had an argument on the last deal that I did with two CPAs that told me you cannot offset W-2 income with working interest. And I gave them the tax code, I gave them everything, and I told the investor, I'm sorry, but you need a new CPA. This person is flat out wrong. And
Yeah.
so my advice to everybody is if your tax person is not investing in these kinds of things, if they are not versed and familiar, you need a new CPA, you need a new tax person. So I would say 98% of them out there are just processing returns, and they're not strategists. They're not trying to help you figure out how to save your money. Go find somebody that is.
Courtney, it's so funny. Like so many CPAs have a stick up their butt and they're just egotistical. I'm a reformed CPA myself. I'll call my spade a spade, but accountants think, and you know what, Courtney, you're going to like this. Here's what I found in doing my tax pro program. Accountants are scared to death if they learn a new strategy. Now, here's why. This is deep. They're afraid to learn a new strategy because then they have to admit to their client they didn't know it for last year. They actually see it as exposure for potential malpractice. Because if they didn't know a strategy and they should have the year before, right? A client's going to go, what the hell? Why didn't you know this before? That's what they think. But the reality is the business owner's like, hey, you learned something new? Call me up. Let's meet. I'm all in. Thank you. Thank you for engaging with me. But they think, I can't go in there and tell them I didn't know something because now I'm exposed for last year. So what do? They dig their heels in. They're idiots. They're jerks. And they tell you, Courtney, that you're wrong, when in reality, you're 100% right, but they don't want to admit they're wrong.
Right.
Yeah.
Yep.
Yeah, that's a sign it's
Crazy.
time to talk to somebody else and get somebody else involved, because I think that as a CPA, I think there's also too like there's just the desire to not want to be audited or under the radar. A lot of people that are CPAs are pretty conservative people, from my experience. So, but on the other hand, like you're trying to pay as little tax as you can. If you pay more in taxes, it's no skin off their back, right? But that's one of the reasons to consider it. We're getting some questions here. A question for Courtney about the 5-for-1 or 4-for-1 charity trust, or the charity. What multiplies your deductions? I'm curious on that too.
Well, and I am not super versed on the tax code on this. I just know that it depends on I know there was a mineral donation that we looked at that was a 4-to-1. If you donated $25,000, it gave you $100,000 deduction. But it would only work up to 30% of your adjusted gross income. So there were some limits. You couldn't apply the entirety of it, but it did roll over for 5 years. And so there's different things like that out there. I know another gentleman that has a 5-to-1 charitable donation in the medical space. They are growing, burn victim skin, which is really super cool. So there's a lot of different things out there. I have some people that I can connect people to. They're not my deals, but I'm happy to connect, others with them.
I'd heard for a while there was something called a charitable land trust that they would do. It was like a syndication, but it was multiples of 4 or 5x, and then they kind of put some limits. Certain states put limits on it, but I haven't heard that as far as other charitable things. Mark and James, are you guys familiar with some of those charitable multipliers or anything? I haven't really heard of that.
No, I'm writing it down. I freaking want Courtney's cell phone number. If she'll give it to me, I want to hear about it.
Yeah,
What the hell?
I'm sure she'd love to connect. That's why. And Courtney, I would say, the people that I know, I feel like I told you this weekend, Courtney, that like I feel like I'm fairly well connected. But every time I talk to you, I'm like, you're just in all the rooms. So I got to talk to you because you hear about all the stuff. So, and you're right, Mark. This is what wealthy people talk about at a dinner parties. They start talking about tax strategy.
You know, and on this note, I'll just say this: when I started my network of tax advisors 2 years ago, it took me a year to build it, and then I launched it 2 years ago this month. I thought I had cracked the code. I'm going to share all these cool strategies. Mark Kohler's written 4 books. I've got all these podcasts and all these articles and all these videos. And within 2 weeks of doing our weekly trainings with our community, I was like, holy crap, I don't know anything. I was like, there is so much out there. And that's why I love this collaboration. See, a normal CPA would go, oh, Courtney, you can't do that, right? Some accountant would freak out, right, Courtney?
100%.
100%.
Like, what are you talking about? That will send you to jail.
Yeah, you're evil, But me, I've learned now that, oh my gosh, what did you learn? The tax code is like 4 feet wide with revenue rulings and cases, and it's like a growing organism. And so there's all these strategies out there that as a community and as a tribe, you start to go, holy shit, I want to learn that too, Courtney. Tell me where to go.
Yes,
and so
on top of that, the tax code is this big, and 98% of it is like 2% of it's how to pay taxes. The other 98 is how to not pay taxes. It literally is a book that tells you how to not pay taxes. Just
love
people
it.
don't know how to utilize it.
Yeah. Yeah, I love it. I look at some comments here. Make bonus depreciation great again, right? This whole thing. Even like the win-win strategy. Tom Wheelwright, who's a friend, he would say, look for the incentives, right? There are basically ways that you when you do what the government wants you to do, they tell you how you can pay less or no taxes. And so if you follow what they want, that's important. Question around this: do you need a tax strategist or a CPA in your state, or can it be a CPA works pretty well nationally? You just find the right kind of group. It doesn't have to be a local one in your state.
You want somebody with experience in your state, but they don't have to be in your state. We work with clients, all 50 states, all across the country. It's fine. But having that experience in the nuances of the different states is important.
Yeah. Okay. Question here. I'm just going to read this as a scenario here. I make $170K a year for my W-2, made another $8K via tax, post-tax as a bonus, and a little bit on a side business. I maxed out my 403B, which is matched at 50%. I take some funds out, about 500 for FSA. I have a home office. What other tax strategies should I consider? Now, I will say this before anybody responds, is that everybody's situation is like this. You got 4 or 5 things. There's things you probably didn't even think of on that list that by getting with the right person, they're going to come up with a bunch more things. But just hearing that, is there anything else that comes to mind that this person should consider? Obviously, we don't know if they have kids. We don't know. There's some other things we don't know from the question here, but yeah.
The only thing I cared about that whole statement, right, Bronson? You said, and I have a little side business. Did you guys hear that? They said, oh, I got a W-2 and then I got a bonus and then I did a 403B. I don't care. That's bullshit. Bend over. You're going to pay tax, period. And then they said, oh, but I have a side business. Whoa, whoa, whoa. You have a side business? You have a side business. Tell me about it. Because with a side business, right, James? Now it's like a whole new world. Like Courtney's like, I'm going to put my kids on payroll. I'm going to take the home office. You can only effing take the home office on a side business. Auto, dining, travel, equipment, electronics, cell phone, real estate. That's where the side business comes into play. People, the side business is your secret to building wealth. Your side business is the key to saving taxes. Your side business is where you teach your family about the American dream. You want to go work your ass off for someone else. That's fine. That's cool. You got benefits. You got a stable income. That's great. Your side business is the key.
Well, Mark, you get me all fired up, man. I feel like I'm listening to a preacher. I'm like, yeah, come on, brother. Amen. Let's go. That's awesome. All right, a couple more questions here. We'll keep answering as much as we can for a few minutes, and then we're gonna wrap this up here in a minute. But Joe's asking, what strategies are out there to mitigate against short-term capital gains in crypto or stock sales? James, do you want to take that one?
Oil and gas will work, to mitigate those gains. Earlier in the year, I like, some tax loss harvesting maybe to reduce those gains. If you can
Tax
do
loss
it.
harvesting. Can you explain that for me and for others?
Yeah, so there's funds out there. You can do it manually if you want to, where you can look at your portfolio, especially with a year like this where we've had a lot of growth on a portfolio, and you need to rebalance that portfolio. There may be some opportunities to sell positions that are at a loss, to offset those gains. If it makes sense, if you work with your advisor or you feel that's appropriate, then that might be a way to offset some of those gains. And not so much in crypto, but you mentioned solar a few times. I like solar, but it's a passive tax credit, that they can help sometimes.
Gotcha. Okay. Here's a question about the side business. Does your side business need to make money to take advantage of deductions? So if you have a side business and you're not making money yet on it, yeah.
Well, okay, if it's not making money, it's because you've taken advantage of the deductions, right? I mean, my side business, does it have to make money to take advantage of deductions? Well, if it's to have a side business means you have revenue. Okay, let's get the definition. I don't mean to be rude to anyone, but let's get our definitions right. I have a side business, which means I have revenue. Can you take write-offs against that? Hell yeah, you have a small freaking business. You have a lemonade stand. Write off the sugar, write off the cups, write off the sign, write off the lemonade. You have a side business that has revenue. You get to take freaking write-offs. Now, can you lose money year after year? No. You got a couple years before the IRS says, that sounds like a hobby. Are you either going to make money or do you suck at it? Because if you're just losing money every year, then you're just trying to create a tax shelter. We don't allow that. It's called a hobby loss rule. I want you to make money. Go out and make freaking money. Fund a 401k, fund a Roth, fund real estate, fund oil and gas, fund solar. Let's go out and make money with your small business. We're not doing small business to create tax write-offs. That's letting the tax tail wag the dog. If any of you think I want you to just get write-offs to save taxes, I want you to get write-offs to go make freaking money. You're not going to make money for yourself working for someone else. Let's go out and make money, and write-offs come with that.
Yeah.
I don't know if that helps.
That makes sense. No, that makes a lot of sense. This is kind of related as well. This will be our last question, and then we'll kind of get into how people can connect with you guys. This says, I have an LLC in California. It's owned by myself and a friend. Can my husband, who has started consulting, do his business through my LLC, even though he's not an owner? How could we include his consulting services as part of our broader LLC? I guess my question is, why wouldn't he just start his own LLC as his side business, right?
Yeah, I agree. You just have a separate LLC, or you're the attorney, so that's more in your wheelhouse than the tax planning wheelhouse.
Yeah, I know. I hear you. Thank you, James. I don't even know if you need another LLC. Let's reframe this for everybody.
Sure.
Wife and husband. Wife has an LLC with a partner. Okay, right there, I'm already like, why do you have a partnership LLC? Because if they're making more than 40, 50 grand a year, they each need their own S corporation.
S corp, yeah.
So first of all, wife, I want to know, what the hell are you doing in an LLC with someone else? Is it a rental property or a business? Okay, it's a business. All right. And you're only making 20 or 30 grand a year and you're writing off everything you can. Okay, that's cool. Then we're going to plug your husband's income into that. Hold it. You're a partnership. You can't plug your husband's income into a partnership with someone else. You want to give your partner 50% of your husband's income? Not going to happen. Okay, so let's leave that partnership alone and evaluate that separately. Now we come back to your husband. Your husband has some revenue, a small business. That's great. Let's capitalize on the write-offs. Do you have kids? What are we writing off? How much income's coming in? Does he need an S corp? Whatever. I may not even LLC him up. An LLC in California, you got your 800 minimum tax. You got the franchise tax board up your butt. California is bad enough. I moved out of there 7 years ago because any self-respecting tax attorney cannot live in California. And so I'm like, holy shit, let's get out of there, save some taxes. So I don't even know if he needs an LLC. What is his business? Everybody, here's my point that I'm trying to make. A business is not an LLC. A business is, I make money selling lemonade. An LLC is a structure for my business. Do I need that LLC? Do I need an S corporation? Why do I even set up that LLC? An LLC does not save taxes. Let me repeat that. A limited liability company does not save taxes. Now, it may allow me to become an S corp. It may make me look legit. I can get an EIN. I can get my QuickBooks going. I can have asset protection. But let's realize what an LLC really is. It's not a business. It's a structure. Please get a tax advisor. Check out my Main Street Tax Pro. Maybe Bronson, is this a transition? And I'll shut up.
Yeah, it's great. Go ahead. Yeah, how can people
If
get
you-
in touch and reach out? Let's just go right into it.
If you need a tax advisor, don't call me. I'm not even selling anything today. Don't call me. I'm out there educating. Follow me on YouTube. Follow me on my podcast, Main Street Business Podcast. I want to help you live your American dream. Follow me. I got stuff for you down the road, whatever. But I'm just giving away so much because I want to help America. I want to help Main Street. But if you need a tax advisor, go to markjkohler.com, Main Street Tax Pro, under services, go to the Main Street Tax Pro Network. It's like hundreds of tax pros that speak Mark Kohler. I make no money on whether you hire them or not. Interview them, do a discovery call, try to knock out a year-end tax call in the next 2 weeks. Get your call done, make a plan for 2025. And all that crap I rattled off, it's overwhelming. I get it. Bronson said that. James said it. I get it. But I want to overwhelm you. I want you to realize that no accountant is going to do this for you. You've got to get engaged in the process. Do it. Get an advisor, start having a phone call, and you're going to save thousands and thousands of dollars. Don't get hung up on what they charge per hour. Look at what you're saving and have a conversation.
Love it, Mark. Thanks so much. Appreciate you being here today. Just real quick before we have James and Courtney give their how you can get in touch with them, we do have the 2025 Investing Outlook Summit coming up Tuesday, January 21st at 4 p.m. Pacific. I put the information in the chat there. We will get the information out. And the speakers, the last couple of years, we've had Ken McElroy and just some amazing other speakers talking about investing. So, James, how can people get in touch with you, follow you, and hear about what you're doing?
Yeah, Rainwater CPA is the best way to get on our newsletter. I do a webinar sort of like this every month where I usually have a topic, answer a bunch of questions, leave at least 30 minutes for Q&A. So if you have a tax question, feel free to jump on that webinar. You can ask me whatever you like on there. If you're on the newsletter, we'll remind you of when those webinars are. If you want to talk to an advisor, again, through our website, you can reach out and we'll get you connected with somebody as soon as possible to talk to and figure out if we're good to work with.
Awesome. Thanks so much, James. Appreciate you. Thank you for being here. Courtney, how can people reach out to you, get in touch, and to follow what you're doing there?
Yeah, so I have a website. It's CourtneyMoeller.com, and I'm on LinkedIn as well. I'm not a great social media person, but I will do my best to keep up with messages on there. But I also have an oil and gas report at oilandgasreport.net. So you can take a look at how the tax advantages of oil and gas can apply to your situation and just get a little bit better understanding of how it works. And so that's it.
Awesome. Thanks so much. Also, we recently started, as I mentioned, this group for high net worth investors over 2 million. We started a group called the Wealth Forum. It's a mix of online meetings as well as in-person quarterly meetups. And we've had just a blast with that, talking about, strategies like this, other things around mindset, or just the things that investors need to look at. So I just really appreciate you being here. Thank you, everybody, for being here today. I thought there was just some awesome, powerful stuff that I'm going to put into practice. I took those notes. I'm going to think on that as well. So thank you, Mark, James, Courtney. I appreciate you guys being here, and thank you to our audience for being here as well. Again, this was recorded. It will go out to you as an email for replay, and just appreciate everybody taking the time and being here and educating yourself. Every time we take time to educate ourselves, we get a little bit better. We learn more, and it gives us more power to be able to do things like reduce taxes or make our money work for us. So thanks everybody for being here. Thanks to our panelists. I look forward to seeing everybody at the next event.